Hey everybody, this is Jim at SP500chart.com. It is about 4:25 on the East Coast here on September 17th, 2013. We're going to take a look at the chart of the S&P 500 real quickly after I remind you that the website and the video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look. And guys, this is another one of those days where I think we can make pretty short work out of this. Basically, we yesterday broke out above our old neckline. And I remind you that the neckline was from a Head and Shoulders top back here that formed in the month of July through about mid-August. You could see that pattern broke down, made its minimum target plus some. Then we bounced at this line, which is drawn from the November lows of last year through the June lows of this year. And the reason I use that line is because those were two significant bottoms that formed and where we got a good bounce. This line wasn't on the chart before we got to this point. And it wasn't on the chart until we had already gotten over this little line here telling us that no, this really is a bottom. So once this was established as a bottom, this line got thrown on the chart. And you can see that that is approximately, not exactly, but it's very close to where we got that good bounce back at the very beginning of September. And we've been moving up all month long off of the 1630-ish lows to now over 1700 again. Now, there are a couple things, and I'm going to go over some stuff real quickly. We were thinking for a while, or I don't know about we, I was thinking for a while that this sure was looking like it was going to be an inverted head and shoulders pattern down here that did not pan out. Instead, we got another one of those premature breakouts over what looked like it was a good candidate for a neckline. That target, had this been a confirmed and completed inverted head and shoulders, is this little pink line right here. This was our old neckline. The question we had coming into this week was, will that old neckline serve as resistance once we reach it again? Or will it be permeable because we've already made our minimum target from that head and shoulders top? And yesterday, the answer to that question was, it is permeable. We got over that line, gapped over it really, and then sold down to that neckline and then bounced this morning. So all I can say is it looks like we got a little support from this line today. I want to remind you, we're not more than one. We're not even really close to being 1% over this line. So the technical significance of being at the level that we're at right now, it's not huge. If we were up a little higher, then it would be more significant. But it's interesting to look at this chart because we've got our minimum target. Had that been an inverted head and shoulders pattern, looks like we might make a go for that. And if we make a go for this line, then I say, heck, why not keep it moving, and let's try to set a new all-time high and get up to the 1720, 1722 level, thereabouts, because this is also a trend line drawn over the last two significant tops. Back in May and back in, that was August. So it looks like, hey, why not? Let's get on up there, test this line, see what happens if we get up to that level. But right now, even though we are not in a really well-defined channel, I'm going to leave these channel lines up here because we've actually got, we got a couple touches on the bottom and we got some touches on the top. The problem is we have some outlying area as well. But if we ignore this this weak open on the 6th and this strong open on the 10th, everything else pretty much fits in these channels. So in these channel lines. So I'm going to go ahead and leave that. And say if we break this bottom line, that could be a sign that, hey, this party is about ready to take a breather, if you will. So there you have it. That's pretty simple. Still over the old neckline. Did not really present much resistance. And it looks like it's even at this point giving us a little bit of support. This is our all-time high line from the S&P highs that were set back in July. If we get over that, then I think getting up to this pink line and this blue line is probably a near given. So that's pretty much it, guys. This market just wants to keep tooling on up. And the good news is when we got over this orange line, I'll remind you of this, we were looking at this orange line with the notion that if we can get over this trend line, then we likely will begin a leg up. And lo and behold, that is exactly what took place. So this kind of analysis does work. So stick with it. Let's see what the rest of this week brings. Thank you for watching the video, and take care.